Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. As always, I have a great friend, my great pal. He is the mastermind, the smart guy of this whole operation, Mr. Al Connickson. Al, how the heck are you doing today?
You know what? I am feeling pretty good, Josh. How about you?
Hey, I feel good. You look good once again. You must be hitting that P90X or something.
Yeah, you need glasses, I think.
That's a possibility. But it is always great to be back, helping our Retire Young family make better investing decisions. And Al, we have another jam-packed show as every single week. And we are post-election, or I guess, well, kind of post-election. Mm-hmm. And we're seeing a lot of major movements in these markets, which is a really great thing for traders and investors. And we're seeing major moves up, but we're also seeing major moves down. And there brings a lot of uncertainty to the public, the average investor. So first off, let's talk about and recap what's going on. There's news events, it seems like daily. A lot of the news events we don't even know are coming. But there is a lot of economic, turmoil, just uncertainty. But what are some of the opportunities that you're seeing in this market right now, and how can we as the public participate?
Well, there's some kind of significant things that are going on right now. We got the COVID issue, but it looks like a vaccine is on the way. We have the stimulus issue. What is going to happen there? And then what about this thing called an election? Even though the election is over right now, there's still a little bit of a question as to whether the government is going to be divided, which is what the market hopes will happen, because that ends up creating some gridlock, which again is something that the market likes. But these are periods of time, they're kind of like almost one-off or non-repeatable, at least non-repeatable on a regular basis opportunities. The COVID thing, the stimulus, the election, those have all provided opportunities in both directions. Movement in the market, the downward movements in the market. There are strategies to use in both of those, but eventually we're going to kind of settle down into looking for opportunities that happen on a more reliable and repeatable basis that aren't dependent upon some of these kind of significant situations that we've been experiencing. And basically what that is, it's the institutional activity. Those guys are not going to stop trading, stop investing. That's the one thing that we can really rely on. It will always be active, and they will always be active in the market, always providing opportunities for us. So it's really important to be able to identify and basically think, act, execute, trade right along with them. One of our goals at the Online Trading Academy, one of our education goals, is not just to educate people or students on what they should do. We think it's as important to talk about what you shouldn't do, the shouldn'ts, I guess we'll call them. And those are the things that keep people from developing consistency, the things they shouldn't do. One is trying to learn too much. You don't have to know everything. Just look at what's right for you. One of the things that we do is help to identify what each student's needs are, where they are now, where they want to go, and help them to identify the right way to get there. And then also master one thing at a time. Too many people look at these markets and all the different strategies that are out there, and it becomes so confusing and complicated that they end up not doing anything or trying to do too many of them at one time, not really getting good at any one thing. Keep it simple. That's the point. Really kind of identify your own niche and stay with that. And then also one of the shouldn'ts is let the clutter and confusion that's out there kind of enter your investing world. We want to help minimize that clutter, minimize the confusion. That helps to increase the confidence.
Well, that's the key thing is to have that confidence. But you also want to have that, you mentioned the keep it simple, the KISS method. Keep it simple, smarty, stupid, whatever you want to call it there.
We'll go with smarty. Let's keep it simple, smarty.
Yeah, so with everything that's going on, does it really matter these news events? It's all based off of, and price really moves based off the institutional activity like you were talking about. It's supply and demand. So explain what that is.
Well, and that's the important thing with an education. It's exposure to knowledge about how the markets function, what's really important. And what is important is what causes price to move. Because when you think about it, anytime somebody makes a trade or an investment, what's the goal? The goal is to have the price go in the direction you want it to go and go far enough where there is a decent profit potential. So how do you do that? How can you do that on a consistent basis with a high degree of probability that it's going to go in your favor? it's basically following the people that are moving price. What's the engine that drives price in these markets? It's institutional activity. And by institutions, we're talking about, the big trading firms, Goldman Sachs, JP Morgan, people like Warren Buffett, the hedge funds. Those are the people that have such financial clout that when they place a trade, they're not going to buy 50 shares of something or 100 shares. It may be 500,000 shares. It may be 1 million shares.
Yeah, and they're the smart money as well. We call them the smart money.
Right. And why do we call them the smart money?
Because they're smart.
Yeah, smart people typically know how to do things right.
That's why it's important to trade and invest like them, like you were talking about.
Yeah, exactly. Just do exactly what you're not supposed to do in school, and that's to copy the people that are successful. And we always say that the number one goal for our students is to help them think, act, and execute like the pros. And the reason for that is that, there's really two groups that are involved in any trade or investment. And typically it's that smart money is one side of a trade. And the other side is typically the public, the novice traders, the retail traders. And who do you think wins on a more regular basis? It's the smart money, obviously, because they not only do they know what the true value of something is and when it's overvalued, but they will invest in such large quantities that they actually provide the movement of the price.
Yeah, the big money is who's actually moving these markets. I mean, the public, you and I, we can't move the market. It takes millions and billions of dollars. And really what you were getting into with the smart money versus the public, it's just an exchange of capital from the people that don't know what they're doing to the people that do. That's why you need a strategy that's designed to trade with the smart money, not against them. And with everything that's going on, we have major moves up and down. So you also need that strategy that's designed to benefit in those up and those down markets. Al, we got a packed show coming up. I want to talk more about the smart money that you were alluding to, the big, the hedge funds, the big banks, the institutions. They're moving the markets, but they're always creating income with the stock market, with the options market, futures, and Forex. So I want to get into those different assets, how they're doing that, and how we can also participate with those assets. This is Josh and Al with the Retire Young Radio Show. We will be right back.